What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I got 5 cheap dividend stocks to buy. Now, I know I got a little bit of flack, like what is cheap, what is not cheap. I'm going to consider a cheap dividend stock. Let's just say less than 40. I'll just give that rule, less than $40. So these are under $30. These are high yield dividend stocks. These have excellent dividend growth. I'm going to go do a dividend stock analysis. Some of these you never even heard of. Some of these I own and some of these I'm long on, but these are fantastic dividend stocks. And some of these that I'm looking at buying, they're very attractive. And, you know, I am making changes to my M1 Finance dividend portfolio. I am making changes to my E-Trade dividend portfolio. As you saw in my last video, I sold Newell Brands and threw it in Franklin Resources. So that's very, I had to make some changes. And, you know, I'm going to show you these stocks that I'm looking at that are on my radar. Very attractive dividend stocks. Let's check these out right now. That first stock is Third Federal Savings Financial Corporation. It's sitting at 2004, has a dividend yield of 5.59%, PE ratio 73.36. Keep an eye on that, first of all. The volume is 165.89K, market cap of $5.62 billion. Its year range was $14.12 to $22.54. Its primary exchange is on the NASDAQ. Who are these guys? We need to do a little bit of digging because this PE ratio, you know, and this 5.59% dividend yield, is this a yield trap? Do things look a little shaky? Let's check this out. So we're Third Federal Savings and Loan. We're known for giving our customers the lowest rates on loans and the highest rates on savings. We believe in putting our customers first and creating value for the communities we serve. As a conscientious lender, we simply believe that taking care of people and putting them in the best position to achieve their dreams is the best way to take care of our business. Without loyal customers, we wouldn't be the lending leader that we are today. That's why our customers will always be our first priority. Okay, so let's do a little bit of digging. So look at this. TFS Financial is a stock holding company for the Third Federal Savings and Loan Association of Cleveland. Northeast Ohio, right by me. Very interesting. What about financially? How are they doing? We need to look at a few things. This PE, few red flags. We need to look at this and their dividend history. Let's check that out. Okay, so we got a few things that are very attractive. 2014. Now this is in millions of US dollars per share data. Revenue has increased 396, 407, 413, 428, 464, 502. 508, not bad. I mean, look, pandemic, it's still going up. I like that. The gross profit going up. Operating income is not bad. Pretty attractive as a stock, okay? Not bad. PE ratio, we got to be a little weary, okay? Just be a little careful with that. I mean, I'm looking at it and being a little weary. But again, I need to expand my dividend portfolio in the financial sector. So this is pretty attractive. I like the increase in revenue over time. They seem pretty aggressive. They seem like they know what they're doing. What about their dividends? Okay, so we got 7 cents, 10 cents, 12, 17, 25, 27, 28. Not bad. 28 cents, $20.04. That PE ratio just be, I'm just a little weary. I mean, I'm still looking at investing in these guys with a 5.52% dividend yield. It's $20.04, an annual dividend of $1.12. Like I said, I'm looking at going after the financial sector. I think what I'm going to do with these financial stocks and bank stocks, I may just throw them on my E-Trade dividend portfolio and just let them reinvest and do stuff. So there's a lot of things that are on my mind. This one is definitely on my mind, and I'm going to keep a very close eye on it. This one looks very attractive. Don't be surprised if I throw that in my E-Trade dividend portfolio once I start expanding it, or my M1 Finance dividend portfolio. So let's jump to the next dividend stock. Holly Energy Partners, 7.52% dividend yield, $18.61. Since the past 5 years and during the pandemic, it took a big nosedive. PE ratio is 10.37. Not bad. Market cap 1.96 billion US dollars. Is this a holly jolly Christmas? Christmas in early August. I know they say Christmas in July. Is this something very attractive right now? I mean, the market cap is 1.96 billion. PE ratio is not bad. The volume is 177.94K. This dividend yield is 7.52%. Let's look more into it to see if this is a yield trap, because this is very attractive to me. $18.61. And I just had another one that's $20. We need to do a little bit more digging before we make decisions. This is why I post these videos, because you need to look in depth a little bit, especially ones that are above 5%, like AT&T, like AGNC, which I believe is a yield trap and it's decreases dividend. Who are these guys? Are they in demand? These are another things that I think about when I invest in dividend stocks. Are these in demand? Do the consumers need it? I mean, let's think about this. Like 3M or IBM, people need those companies. Do they really need these guys? Are these guys an impact player with the economy or in the local area or regional area? Let's check this out. Okay, so Holly Energy Partners is a Delaware limited partnership formed early in 2004 by Holly Frontier, headquartered in Dallas, Texas. HEP provides petroleum product and crude oil transportation, terminaling, storage, and throughout process to the petroleum industry, including Holly Frontier Corporation subsidiaries. The partnership, through its subsidiaries and joint ventures, owns and operates petroleum product and crude gathering pipelines, tankage, and terminals in Texas, New Mexico, Washington, Idaho, Oklahoma, Utah, Nevada, Wyoming, Kansas, as well as refinery process units in Kansas and Utah. Okay. Our assets are located in attractive high growth markets. So that's one thing that's very important. Okay. They just explain what they do. Experienced management team with proven track record, strategic relationship with Holly Frontier. Substantial part of our business operates under long-term contracts with minimum volume commitments. Revenues are mainly fee-based revenues with limited commodity risk. So high growth markets, that's very important. Okay, so they're in these high growth markets, $18.61. Okay, if they're that good, how much money are they making? We need to look into that before we start saying, oh, this is a stock on my radar, this is a stock that I want, or this is a stock that I'm going to buy. We need to look and see how much money they're making. Let's check that out. Okay, so this is very attractive. Now this is in, again, millions of US dollars. 332, 358, 402, 454, 506, 532. Took a little bit of a nosedive at 497. We'll see what happens in this next year, but just by looking at the trends and things starting to wake up, that looks pretty good. The gross profit has increased, it looks like, each year. The operating income, not bad. Things look very attractive. The PE was not bad either from what we are discussing. Okay, if they're that good, 7% dividend yield, what about its dividend history? Are the dividends going up? Are they going down? What is going on? Let's check that out. 54, 55, 57, 58, 59, 66. Uh-oh. Looks like during pandemic time, it looks like it took a little bit of a nosedive. Okay. But what is going on here? We're seeing an increase in dividends. It's cheap. It's $18.61. PE ratio 10.34. Dividend yield is 7.67%. Annual dividend $1.40. That one I may throw. That one I may throw on my E-Trade dividend portfolio. That one looks very attractive. May throw it on M1 Finance. Very attractive. I need to expand, like I said, with energy and this food coma was like terrible. I literally killed a bunch of sushi and I was ugh, for a while, but I'm so thirsty. The salt is terrible. So here's the thing with these guys, their dividend has increased over time. They took a little bit of a nosedive. That's something that I'm going to look at. This is something that, high yield dividend stock. It looks very attractive, and its revenue has increased. As I showed you with Arbor Realty Trust, it was right around the 7% range, but it has increased its dividend. And this one's very attractive as well. And Arbor might be more expensive than this one soon. So this is 1861. This is a great deal. So HEP, let's check out the next dividend stock. And look who we're talking about. The mortgage-backed rate that has beating the S&P in the past 5 years, it's 1843. Its volume is 1.41 million. Dividend yield is 7.60. This is a mortgage-backed rate that is beating the S&P in the past 5 years. Let me repeat that. This is a mortgage-backed rate that is beating the S&P in the past 5 years. This dividend stock is unbelievable. Okay, when you look at 7.6 dividend yield, you're like, "Whoo, you got to look more into it. You need to understand, is this mortgage-backed rate really good? Is this dividend stock a trap? Is its revenue increasing? What is going on? Is this a yield trap?" This is 8.0. Now, sometimes, these small PE ratios, sometimes they can be misleading. So you have to look more into what's going on, how much money they're generating, are they in demand? This is very interesting, is a mortgage-backed rate. And I'm going to show you its revenue, which is extremely attractive. So look at this, 2019, 2020, 30 cents, 31, 33, 35. Look at that dividend, 813, okay? A 7.14% dividend yield, which was revealed on NASDAQ.com, 1843, a dividend yield of 7.27%. Wait a second. We need to see how much money they're generating. Are they in demand, and are they making money? We need to see. So speaking of mortgage-backed rates, they are increasing their revenue. This is in millions of US dollars. 141, 142, 213, 346, 484, 535, 603. This is, again, every time I see this with a mortgage-backed rate, it is like I am speechless. I mean, mortgage-backed rates usually decrease in price per share. Their dividends have decreased over time. A lot of them are yield traps. This one looks extremely stable. Again, none of this is financial advice. It's for entertainment purposes. There's a disclaimer in the description of each video, but holy cow, I mean, it is increasing its revenue each time. How can you say no to this dividend stock? I own this one. I am long in it, absolutely. And we're going to jump to the next dividend stock. Oh, by the way, my buddy Business Famous is the Dividend Investor of the Week. He has some very interesting stuff for you. I have my affiliate link on there. I do get a small commission if you guys are interested in signing up. But he has something really cool for $5. 10 dividend stock mistakes to avoid. As I emphasize this with yield traps, you got to be careful with a lot of the stuff. And here's a thing called get paid till you wait. And this thing that I really like is turbocharger dividends. These are all 5-star rated. These are strategies that I like to integrate with a lot of investors, and I'm still learning. So a lot of the stuff and philosophies that I have that I like mixing with investors, I'm getting better as a dividend investor. Don't expect me, to be, all knowing and all amazing. I'm still growing. I'm still adapting, but there are some strategies, especially with this one. This one is amazing with what he does with that. He, messaged me a few times, like, check this out. This is what I do. And I'm like, ooh, I mean, I'm not going to promote any of these guys have an affiliate link on these guys just to try to get money out of you guys. This is very knowledgeable stuff, and this is very cheap stuff. So I'm doing this for you guys. I can't always answer a lot of your questions, and these things are very helpful for you guys. And this is why I promote these guys and have partnerships with these guys, because I believe in them and I believe in their works, and I believe they're not here just to get money out of you. They're really trying to spread their knowledge to you guys. And these are some things that you guys can capitalize on, just like my buddy Too Much Money or Money by Ramey. I mean, I just showed you a whole dividend investing strategy that I have of Matthew Ramey, and that's stuff that I learned from him. That's stuff that him and I talk about all the time. And this is stuff that I message with these guys back and forth. What do you think of this stock? What do you think of that stock? I like this one. So this is stuff that can really enhance your dividend investing strategy and really kick up your dividend investments, and not to make mistakes that I made and he made as newbies. We really want to kick it up a notch for you guys and really have you exceed and excel. So these are just some things. If you guys are interested, I'll post my affiliate link in the comment section. So let's jump to the actual dividend stock now. I've emphasized this stock, Key Corp. It's a dividend yield of 3.58%, PE ratio 8.92. It did take a little bit of a hit during the pandemic. And of course, during the recession, it took a huge nosedive. So its year range is 1133 to 2365. This is a really good bank stock. And like what I said before, anytime you swipe your credit card, they make money. So they make money off of loans, car loans. People are buying cars in the Kelley Blue Book on used cars, and their Kelley Blue Book value is like, gosh, like 100, 200% less than what it is. And people are just, in my honest opinion, just stupid enough to get hustled like that or get outbid by somebody else who's not very, who doesn't know anything about Kelley Blue Book values. And look what happens. They take a loan out from banks. Key Bank is one of them. I actually took a car loan out through Key Corp from my 2012 Camry. It only had like I think 70,000 miles on it. It was a deal. And I'm just about to pay that off, which is great. And I don't have to drive that much. My job's a mile away, so it's great. But Key Corp, they are doing phenomenal. They're increasing their dividend, and revenue-wise, they're doing fantastic. Let me show you that. So this is in millions of US dollars, of course, 4,000, 5,000, 6,000, 7,000. Took a little bit of a nosedive. It'll be right back up in 2021. I expect that to happen. So banks make money. They'd be really stupid to go out of business. I mean, I'd be really surprised. People that work in banks and high up in the corporate ladder in the banks, they know what the hell they're doing. I mean, they've survived a pandemic. They survived a recession. And they're very smart people. So, I mean, these are reasons why they're brokers. They're watching your money. They are handing out loans because they expect you to obviously pay it off, and they're hooking you up. But so you have to pay them a small fee or a small percentage. They're giving you a cashback card because they believe, based on your credit score, that either you will make your payments on time, or maybe you'll have to pay a little bit of credit card fees, and then they make a little bit of a profit. So that can happen. So let's jump to their dividend history. Beautiful. 2016, 8 cents. 2018, 12 cents. 2019, 17 cents. 2021, 18 cents, almost 19 cents. Dividend yield of 3.54%. PE ratio 8.91. Annual dividend of 74 cents. How do you say no to that? And let's jump to the final dividend stock. PPL Corp, 2941, a dividend yield of 5.64%, volume 3.85 million. This is a beautiful dividend stock. Many people own this stock, and this is one that people emphasize about a high yield dividend stock, and it's a very popular stock. You need to know who the heck they are before you start making a move on them. A lot of people don't know who they are, and I'll reveal this to you right now. Here we go. This is important. Who are they? They're a Fortune 500 company. Largest utility companies in the United States are companies in Kentucky and Pennsylvania, are committed to providing essential energy in extraordinary ways, and we deliver more than 2.5 million utility customers, more than 5,600 employees, about 7,500 megawatts of regulated generation capacity, 36 billion kilowatt hours of electricity delivered, more than 83,000 miles of electric and gas lines. Oh man, now I like this. Look at this. We are committed to doing our part to address the challenges of climate change and to drive innovation that enables us to achieve net zero carbon emissions by 2015 by maintaining energy reliability and affordability for the customers and communities we serve. Let's think about this. They're trying to get a net zero carbon emission by 2050. They are extremely adaptive as a company. They have a large territory. So when you think of like companies, like I'll just give an example, like First Energy here. I'm stuck with these guys. I mean, These guys are very effective and attractive as a company, and let me show you how much revenue they're generating. So here's the thing about, some stocks like this. Here's something with some stocks like this. They're pretty consistent. They're not jumping way up, and they're not jumping way too down. That's still attractive for me. And the demand for the customers is important. They have a large territory. Okay. They have stuff that people need. They're not going anywhere. That's the one thing that, okay, revenues, this and this. Okay, but they're in demand and they are extremely attractive. And I'm going to show you their dividend history. 36, 37, 38, 39, 41, still going up. Now the PE ratio isn't revealed, but I'm kind of surprised that either of these aren't revealing it. Dividend yield of 5.68, annual dividend of 166. So all these 5 stocks that I mentioned, they're in demand. The revenue is good. They're increasing their dividends. They're less than $30. All less than $30. These are all attractive. I own KeyBank. I own Arbor Realty Trust. Just looking at some of these, I looked over here, my sheet. These are all on my radar. And don't be surprised if I buy all of these that I mentioned, because I need to expand. I need to be more aggressive. And I need to get my M1 Finance dividend portfolio bigger, and I need to get my E-Trade dividend portfolio bigger. So energy is either I'm going to have energy on my M1 Finance, or I'm just going to stick with the financial stuff on the other side. Maybe have JP Morgan as like an individual stock, or I'm going to just maybe combine them and see what I can do by combining them and having them in a high percentage of my M1 Finance. So if you guys are new to my channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I fought off this food coma, and I had to take a break in the middle of this video and chug a bunch of water because all the salt that I had from the sushi and the soy sauce was ridiculous. So you guys take care. I'm going to post a video tomorrow, of course. But let me know what you think of these 5 dividend stocks. And again, if you are new to this channel, you got to subscribe. Everything's free for you guys. This is what I do for you guys. I enjoy posting these videos. I show you my dividend investing strategy, my dividend investing journey. And you got to smash that like button. I mean, the more likes, the more comments, the more active you guys are, the more I'm going to be printing. I mean, everybody's joking around now on Twitter, Darth prints. Well, I'm going to be printing. I'm going to even when my fall semester starts next week, actually on the 23rd, I'm going to try to post 4 videos a week, my day off. I mean, I have plenty of time to do that. I mean, I enjoy doing this. I'm going to continue to do this. So you guys stay put. You got to hit that notification bell because I'm posting videos right and left, and you may miss one that that you may enjoy or enhance your dividend investing strategy. And again, none of this is financial advice. It's for entertainment purposes. There is a disclaimer in the comment section. And you guys have a great Saturday.